Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com. Don, welcome to the show.
Hey, John, ready for another one?
Great to see you last week in Beaver Creek. You and I were honored to be two of 13 speakers there. A couple thousand people attended. We had about 100 or so in our room for our live show, if you will, where we talked macro for about 20 minutes. And then for about 25 minutes, we shared stock ideas like the one we're going to talk about today, metallic minerals. We'll introduce Greg Johnson in about 5, 7 minutes here. But first, we wanted to talk a little bit about the conference for investors.
Yeah, I'll go first. I mean, this was my third year going back. I've always had a great time there. It's kind of nonstop. I mean, you kind of show up at 8 o'clock, register, and then do one meeting after another for 4 days in a row.
It's really true.
I had a really strong schedule this year. Just about every stock on my list, about 50 companies. I didn't count them all. I wanted to listen. I wanted to hear 90% of them. So a real strong schedule. And it was great. I mean, we got to do the keynote speak, 50-minute keynote, like right at the beginning, Tuesday morning. That was fantastic. I really enjoyed that. Also got a nice gift. Did you get a gift? I don't want to tell you what I got. I got a nice one. Did you get one?
If you got the keys to a car or something, I'm going to be annoyed. No, I got a nice gift that Jessica and Misha.
I'm sure we got this. I'm sure we got the same thing. It was a battery. So for traveling, really, I don't have one of those, so it's pretty awesome.
It is awesome.
I was surprised, but yeah, nice. The first time I got something for doing a speech. They're usually always just giving your time away for marketing, but that was a nice gift. I think we're invited back for next year too, which is great.
Yep.
The weather was fantastic.
I talked to Jessica right after that, and she booked me for Zurich in November. So I'm speaking there November 10th and 11th. And then they do the PDAC show, which is huge. I mean, it's a smaller show for them, Don. They only had about 70 companies last year, which isn't small, but it's small for them because Beaver Creek is more than double that. But that I think will expand from 70 to 100, maybe more companies this year in Toronto. That's the first week of March. So I'm hoping that you and I can get on that stage as well there. It's not something they run, obviously. It's a whole board decision and everything, but it would be awesome to be there because I'm going to be in Toronto with a bunch of clients anyway.
I'm actually going this year.
Oh, good.
First time been to PDAC, but I'm going.
It'll blow your mind. It's huge. I mean, in terms of like the number of people, it was well over 22,000 people last year. So it's, I think Beaver Creek was around 2,000. So you're around people nonstop, which can be a little bit exhausting. But what's cool about their program there is that they only have 2 days of one-on-ones, not four. So it's less exhausting from a walking around perspective.
I want to meet Eric Sprott too. So I know he's always there. He usually does a keynote. So I'm going to try to meet him.
Yeah, well, you and I are both in touch with his staff. I think he emailed you directly, right? So hopefully we can meet him here in Arizona, maybe sometime before the end of the year.
That's a possibility. Fingers crossed.
Yeah, that'd be wonderful. So let's talk a little macro. Obviously we have an incredible backdrop. Yet, I get this question a lot the last 48 hours, with some of the RSIs, relative strength indexes on some of the miners really stretching high, like CDE today hit 84, 85. Generally over 70, you should start thinking about selling something, not necessarily hitting the sell button. But at 84, 85, I had to get rid of CDE today, which I've owned for 9, 10 years because my cost basis is so low versus a $17 price. I mean, I was buying that at $1.25, $1.50 in 2016. So like I'm just thankful for the ride, and I'll buy it again when it gets to a more reasonable valuation. But what is your take on that, Don? Do you think that RSIs and valuations can just keep running in a hot market like this?
I do. My feeling, and I've been tweeting about this a lot, is that during a bull market, which I think began in August, the whole tone changed in August, I believe. Once you enter a bull market, you get on the train and you don't get off. You ride it until it at least gets mature. And the quality companies, I don't think you really get off of them until you feel like you're approaching a top. So for me, my target for Coors $70. I have no plans on selling it before 70. I put a sell target price for all the Mormons. The Mormons are the 8 prettiest silver stocks. You can marry all of them, and you don't divorce them. Divorce is when you sell. And you don't divorce the Mormons. And so I have target prices on all of them, and for me, Coors 70. I'm hoping that's my exit. I'm hoping that's my exit price. I've learned that I don't sell. Stocks rip and go higher. I generally don't sell them. Agnico I have a 23 bagger. Maybe it's up to 25 bagger now. Haven't taken any
25 bagger from here.
Yeah, my entry price. Yeah, bought it like $6 and said, what's it at?
Oh, okay. I thought you meant from here because it's at 153.
No. It's a 23 bagger in my portfolio. I haven't taken any profits, and I have no plans to take any profits until it gets to $400. So my sell target for Agnico is 400. I think we get there, and that's when I basically exit. So I'm riding this train up and down, don't care, because I think that the gold price, we have the wind at our back here. I don't see gold price going down. I think the U.S. is heading into a reset situation, and all gold is going to do is sniff that out and just go higher. So it's going to, I had a 3150 target for gold, but now that we're at 3,700, I'm starting to rethink that. I'm probably going to have to, Friday I do my recaps. I'm probably going to take it up to 3,250.
You mean the floor?
Yeah, the bottom. Yeah. I'm probably going to take it up to 3,250, and we might not even see that. But even if you go back to 3,250, the key here is how long does that correction last? Because the longer the correction lasts, so let's say you crash to 3,250 and then it just gets stuck, it gets stuck down there in a trading range and it can't get above, 3,500 for, months and months, or maybe it gets stuck, even goes lower. I don't see that situation here. So if the correction in a bull market, normally these corrections are short-lived, like 4 to 8 weeks, and then they go higher, and then we go higher. It's a real short correction. And it's basically a nothing burger. It doesn't hurt your portfolio. What hurts your portfolio is when you get a correction and it stays down. 2012, 2013, 2014. It was just boom, 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 boom. It just kept going down, 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 down. Those are the ones that hurt you. And I don't anticipate that at all. So get on the train, stay on the train, buy the dip. That's my expectation. I mean, okay. I was having, yesterday and today, I was buying. I wasn't waiting for a dip. I was buying stocks.
I hear that. I'm a little concerned about the Fed tomorrow because I think expectations are quite unreasonable. When we were at the Beaver Creek conference, I probably heard 20 people say to me, we're expecting 50 basis points. Some of these people are pretty smart. That is not what's factored into the CME Fed Watch Tool website right now. If you go to CME Fed Watch Tool and just Google search that, everyone, you can clearly see it. Last night, I didn't check today, but as of last night, 93% probability of a 25 basis point cut tomorrow, not 50. And so that's what I call a gamble, right? Like if you're really gambling that you're going to get a half point from a ex-lawyer like Powell, I don't think so. I think Powell is very pragmatic. I don't think that the Fed has our back. Yes, the Fed will be forced into action eventually, but tomorrow is a lot of risk because I'm not just talking about our sector. I'm talking about the NASDAQ, the S&P. That's where the real risk lies, is that markets have just melted higher here. Like, oh yeah, we're just going to get 8 cuts like Trump says. No, that's not happening. Like this is going to take a lot of time, in my opinion.
You're right. Powell shouldn't even be cutting tomorrow. So it's definitely 25. The reason why I say he shouldn't be cutting because the stock market is at an all-time high. You don't pump a stock market. And that's what he's kind of doing here. He's pumping a stock market by lowering rates. He's lowering rates because the stock market is, the economy is actually a lot weaker than the stock market is, if you will. It's kind of a dichotomy. Stock market's at an all-time high, but the economy doesn't support it. If he was really bullish the economy, there's no way he would be cutting here. He's not bullish the economy, and he shouldn't be. I firmly believe we're in a bubble here in the stock market. I mean, it's 5 times book value, 3 times sales, 2 times GDP. These are nosebleed levels. We're going to have the end of this bull market, this 15-year bull market. Pretty soon we could be saying 16 years. It's going to come to an end any time. And once it happens, and I'm very bearish in this regard, once it starts, it's going to be a long one. I mean, it's going to be brutal, brutal. People have been making money in stocks for 15 years. They're used to it. And when that all stops and your wealth goes down, it's going to be really, really bad, if you will, because
Yeah.
this isn't going to be a normal business cycle. This is a debt cycle. That's not the right word. This is a debt crisis cycle, heading into a debt crisis, a reset of some type. This is historic, epic stuff here going on. That's the reason why gold's at $3,700 because it's sniffing it out. It's going. We got to hide here. All hell's going to break loose. And Warren Buffett's been telling you that. He just keeps buying. He just keeps going to cash. He's going, here it comes. Here it comes. I mean, it's not all these old guys all know it, right? Jim Rogers. He's been saying, be very careful. Mark Farber, Jeremy Grantham. All the old guys are like, it's coming. Look out, look out. I mean, these are the guys that have been around the block. Those are the guys to pay attention to, not these young whippersnappers on Wall Street. Don't listen to them. Listen to the old guys.
I agree with you. I mean, if you look at, an early 30s guy on Wall Street, successful, making a lot of money, they haven't even seen an 08, 09 in their career. Like they may have seen it from the sidelines in college or something, right? But like they haven't played it with their own money. And now, as I've said many, many times on our show, Don, and every podcast that I'm interviewed on almost, you have to watch the velocity. If you look at Liberation Day, April 2nd, and what happened after that, silver was down almost 13% in 2 days. Not a silver stock, silver. Like this is the kind of volatility that could be coming. I'm not saying necessarily for silver and gold, but I'm saying to the NASDAQ, to the S&P. These things are heavily weighted in technology stocks. And some of them, like the IWM Russell 2000, if you look at the 2,000 names in there, you and I have pointed out before, less than half of the stocks in the IWM have earnings. Like, yet every financial advisor is happy to buy IWM, happy to buy QQQ for their model portfolios that they throw these clients into that are 70 years old, 65 years old. Like, way too much risk out there in the broad market, and that will come to a bad ending. Somewhere between here and March for me. I don't know where that's going to happen, but if you're looking at 6 or 7 months of upside, you have to judge as a client, like what's my risk reward in everything that I do right now? Because as you pointed out, Don, 15 and a half years of a bull run here. It's like we're kind of floating on air as you pointed out before. This is not the time to get aggressive into risk assets like technology, in my opinion.
Yeah, well said.
So we'll bring on Greg Johnson here, who's the CEO of Metallic Minerals. Ticker in the US is MMNGF, and in Canada, MMG. Greg, welcome to the show.
Hey, thanks for having me on, guys.
Hey, Greg, welcome.
No problem.
Thank you.
So, Greg, we just saw you for dinner last week at Beaver Creek. Thanks a lot for hosting some of my clients and I. It was really enjoyable. Still shocked that the valuation of your stock is where it is, given what you have. Would you give us maybe 8 to 10 minutes on the opportunity at Metallic, please?
Yeah, you bet. Well, again, thanks for having me on. Metallic Minerals is focused on a copper, gold, silver asset in the southwestern Colorado, which Newmont Mining has taken a strategic investment into the company regarding. We also are focused on our high-grade Keno Hill, Keno Silver project adjacent to Hecla, which is now Canada's largest primary silver producer. And unusual for a exploration development stage company, we actually have a bit of cash flow through our alluvial royalty portfolio, both in South Keno area as well as in the Klondike. And this is our 3rd year of royalty production. We're hoping that this year will be one of our largest yet. And I think looking forward, Maybe a bit of background. I'm an exploration geologist by training. Started out my career with Placer Dome prior to the acquisition by Barrick. Went on to co-found Nova Gold, and many of my compatriots here in the Metallic Group are former Nova Gold alumni. We really developed our business model last cycle with Nova Gold, in that our approach to business is going after assets that we believe have the potential to be big enough for a major during the low metal price part of the cycle. So last cycle for Nova Gold, that was in that 1999 to 2004 period. First starting with our gold asset at Donlin, which we grew to over 40 million ounces of gold, making it one of the world's largest deposits. I was fortunate enough, part of the original discovery team on that asset. Barrick came in as a 50% partner, and just recently the Nova Gold guys have bought Barrick out. So it's great to see that asset moving ahead again. We did the same thing in 2002 at the bottom of the copper market cycle. We purchased an asset from Rio Tinto called Galore Creek, and then advanced that. We quadrupled the size of the resource on that and brought Teck and then Newmont in. And I understand from the Beaver Creek meeting that that asset is now finally getting kind of the green light to move ahead towards production. And then we did it a third time during the low in the zinc market in 2004, when we picked up another asset from Rio Tinto called Ambler. This is up in Western Alaska. This got spun out as Nova Copper, and then basically that became Trilogy Metals and got partnered with South 32. So in metallic minerals, 2016, myself and Scott Petzel and other members of the team said, looks like we're at the bottom. We've just gone through this devastating bear market drop. Started to look around for assets. The very first opportunity came along was this, the property. It was pre-Hecla, so it was Alexco Resources in the Keno district. And we saw the opportunity to basically consolidate the entire eastern half of the district, much less explored, 8 past high-grade producers, but very shallow, and put that land package together and really unitize the district. With Hecla stepping in 2022, taking it into commercial production as we speak. They've now had 2 quarters of positive cash flow. They now are referring to it as a core asset. We're very excited to continue exploration at Keno. We tabled our first high-grade silver resource in 2024 at Keno. That's on 3 open pitable and 1 underground deposit. And we've got the opportunity to continue to grow those resources. And we have 40 other targets in these massive untested silver and soil anomalies in the district. And one of the real points I'll just make about Keno is that not only is it the highest grade in Canada, it's the largest primary silver producer in Canada, it's Hecla's highest grade operation, but all the production to date has been focused on relatively narrow high-grade structures. And we're now seeing the opportunity for open pitable. Yes, the grades will be a little lower, but if you're mining hundreds of meters of width, your costs are also dramatically lower as well. So a hybrid type scenario of production in the Keno district could be a game changer. And this is a district that we see the potential to be over 1 billion ounces when you take the historic production on the western side of the district, add the down dip exploration potential that Hecla is now demonstrating, and then start to look at what the potential is on the eastern side of the district. The next asset that came into the portfolio in 2019, we got approached about the La Plata project. That's behind my shoulder here in the image. Alkalic porphyry system, so a precious metal-rich porphyry system discovered in the 1950s by Rio Tinto. So this is going to sound familiar to that Galore Creek asset. Basically, Rio Tinto drilled it in the 50s when copper was at 40 cents a pound. So they needed much, much higher metal prices than today. Asset got picked up by a couple of other mid-sized groups, including at one point Exxon Minerals Division. And then in the 70s, it gets picked up by Phelps Dodge, and then ultimately lands in the portfolio for Freeport. Freeport drills a few last holes in the late 70s, and then one last hole in 1995. And the project sits idle from 1995 until we got involved in it in 2020. We took a look at it. It was an incredible similarity with both our Galore Creek asset that we advanced under Nova Gold, but also we've subsequently learned how similar it is to Newmont's Cadia mine down in Australia. And so what Newmont, originally Newcrest, sees at La Plata is the potential for multiple porphyries along two distinct structural corridors at La Plata. We've only drilled one of those, but we've already built over a billion-pound resource for copper, 18 million ounces of silver, wide open. The higher grade is open both shallow and at depth. And we have 10 untested porphyries where we're getting up to percent level copper at surface with up to multi-gram precious metals at surface that are untested. So really excited to get the next round of drilling in some of those targets. So that's kind of the background and the highlights, John. Maybe we could, see if there's any other questions.
Yeah, of course. I'll start it off. So, we were together at Beaver Creek. Yukon is a district that is very robust historically, but obviously in Q1 this year, Victoria Gold was there with issues, and I personally feel a lot of the Yukon companies or projects still have a black eye from that kind of unfairly, because some of these projects are 200-300 miles away from Victoria. So can you first talk to us about what your feeling is about that part of the world as a jurisdiction, and how far your project is from Victoria's, perhaps?
Yeah, I think your point is a good one. There's no question that everybody with a Yukon address, it took about a 50% haircut right off the top, whether they were associated with Victoria Gold or not. I mean, it was unfortunate what they had with the heap leach. It looks like that's in hand now. They've stabilized the situation, and there's now an auction process. And I think there's a very good chance we're going to see a major step in, probably who has significant heap leach experience, to purchase that asset. We've started to see that fact that auction is ongoing right now kind of percolate some of the names in the Yukon, but I agree with you. I think a lot of these names got unfairly tarnished with the Victoria Gold, brush, and I think the opportunity for deep value in some of these names is exceptional. Really, there is no other heap leach in Yukon, so no one has the risk profile that you had at Victoria. It was kind of an over reaction, I think, largely by the Yukon government on this. But as I said, I think the situation has stabilized, and if we get a good group coming in to take that on, I think it's going to really open the window for other Yukon companies to reestablish a fairer valuation, for their assets.
Great. And as a follow-up, how far are you from Victoria, and how far are you from Hecla? It sounds like you're very close to Hecla, which is symbol HL in the States.
Yeah, with Hecla, our land package is interwoven with them. So Victoria Gold is several kilometers away on the other side of the north of Mayo region. Keno is one of the most developed areas in the Yukon. So there's a number of players that are in and exploring around our area. We're on the road. And so our area is definitely continued to see activity throughout that period. But I think valuations and people are starting to relook at the situation in the Keno Hill Silver District specifically.
Great. So I cold called Phil Baker, who was the CEO of Hecla, gosh, I guess 2016, because the stock was just absolutely bombed out. And I had asked him about his acquisition strategy because, in 2015, 16, companies like Hecla and Core were kind of on the acquisition trail, if you will. And Hecla has a history of acquiring companies like yours or projects like your Keno project. What are your thoughts there in terms of, is that a possibility? And, we're seeing a lot of deals in M&A in the sector right now. So what are your thoughts there?
Yeah, I mean, I think you look at the chart on Hecla and it's done absolutely amazing. I think the new CEO is bringing a fresh perspective. He's former VP exploration for Barrick. So he brings an exploration kind of perspective. They are heavily focused on exploration in the Keno district. They've been mostly drilling down dip on the historic mines in the district. They're having good success, but they're going deeper and they still have the challenges of the ground conditions. That's where we see the opportunity to demonstrate the shallow high-grade potential, in the eastern half of the district as really being meaningful. But in the most recent quarterly report for Hecla, they stated that Keno was a core asset. And at $40 silver, you look at the cash flow potential from that asset, it could quickly jump ahead of Coeur d'Alene and be right in there next to their Greens Creek asset in Alaska in terms of cash flow. And at up to 1,000 gram per ton head grades, it blows almost anything away, globally, from a grade point of view. It's not the highest ounce production. So I think their statements have been that they want to grow production. And, I would see them really seeing this as a cornerstone asset for Hecla. As I said, you've got 200 million ounces that were produced historically on the western half of the district down to about 300 meters depth. Alexco came in and started saying, well, these deposits don't stop at 300 meters. They extended that down to about 600 meters with the discovery at Birmingham. And now you've got Hecla drilling 700 meters and deeper. And so you add up the 220 million ounces of historic, you add the 160 million ounces of resources and reserves for Hecla. It's not a stretch to see 500 million ounces on the western side of the district. And you start shallow on the east, and you say, okay, let's take that down. I mean, you're starting to look at something that would be, classified at certainly greater than 500 million ounce potential. And I think you could argue even a 1 billion ounce district, which makes it truly world-class in terms of silver.
Yeah, that would be amazing. I mean, that's we had lunch with Aftermath Silver, and they have 140 million ounces of silver, and for a junior, that's a lot. Because a lot of people quote on their website silver equivalent ounces, not how many ounces they actually have. And that's fantastic, Greg. Well, good luck with your project there, and hopefully you won't sell cheaply.
we have no need to sell on it. The way we look at it is every day the silver price goes up, that asset gets more and more valuable. I mean,
oh sure,
we do see, if I compare the two, Keno and La Plata is that galore scale asset. So the potential for that to be a 10 billion plus pound, system, and similar to Galore to be $1 billion asset is very real. We see a tremendous amount of value to be added at Keno, but long term, if I was Hecla's CEO, I'd be looking at wanting to consolidate that district so that I control all the upside for that asset, because I think it's really going to be an important one for them.
Right. And yeah, I mean, I coach CEOs like yourself all the time in the junior space. Don't sell cheaply, because these guys absolutely need a project like yours to consolidate, right? And like where were these guys at $20, $25? We're at $42. Things are just escalating as we get deeper into the rally here. And I think, as Don and I point out, Greg, on our show, like literally every time we record, $50 silver being the all-time high at two different points in the cycle is not really $50. It's more like 68 to $70, inflation adjusted, right? So at 42, there's still a ton of upside here, which the majors and the mid tiers clearly understand. And great job on getting it this far, and congratulations on your financing recently. I saw that Newmont also came in to that through your press release, and they have a 9.5% position now still.
Correct. They were the largest single participant in the financing. So we raised $8 million in that round. A portion of that's going to Keno, and the rest is going to go towards La Plata, and a small amount to the alluvials. One comment I might just make, and probably you guys have made this comment in the past, but what's unique about silver and the macro with silver is the majority of silver is produced as a byproduct of either gold mining or copper mining. And if you've got a mine that's primarily mining copper or gold, they're not going to adjust their throughput based on silver price. So it means that silver's supply is extremely inelastic. It doesn't really matter what the price does. Mines are not, outside of that relatively small minority that are primary silver, most mines cannot change their production of silver to meet that higher pricing environment meaningfully. And so that really gives silver exceptional leverage to continue the move once you get into a trend like this, because there just is no way to meaningfully deliver large supplies of new production of silver where it's mostly a byproduct to other metals.
Yeah, great point. Don, I'll turn it over to you.
Hey, Greg, this is going to be fun. So I want to focus on Keno Hill. So your current resource, if I'm right, is 18 million ounces.
That's right.
Yep. What's the grade?
Yeah, so 3 of those are open pit deposits, and so they're going to reflect a lower cutoff grade. So Hecla uses a 200 gram per ton or higher cutoff underground. we're using something like 100 gram or even a 50 gram per ton open pit cutoff. So the average grade is around 250 grams when you approach those deposits as open pit. If you were to go in and do selective mining, you'd leave ounces on the table because you'd raise your cutoff grade, and then you'd be seeing something that'd be more like the average in the district, 500 grams or so, if you want to do a more selective approach. But that's a real opportunity, as I mentioned, for looking at these things in the district where you have the potential to mine them as a low-cost open pit. You can bring that cutoff grade and your operating costs down dramatically.
How many meters did you drill in 25 and at Keno, and how many do you plan to drill in 26?
In 2025, we just completed our financing. So we are right now in the planning stages for a drill program that's going to be either late this year after we see freeze up, or it'll be early next year. So we're still in the planning phases, but we're targeting something like 2,500 to 3,000 meters of drilling at Keno that would be resource expansion drilling, as our next program. We've drilled roughly 18,000 meters to date at Keno to get to the current 18 million ounce resource. The largest component of that is at our Formo deposit, which is right on the highway and adjacent to the Birmingham mine complex. And the others are also road accessible, but further to the east, and those are the more open pittable. And we've got a number of very large soil anomalies, 6 to 10 grams per ton in soil that have never been tested on the eastern part of the district. And what we're starting to see develop is same style of mineralogy as you see in these higher grades through-going structures on the western part of the district. But what we're seeing is stockwork zones where you can get zones up to 170 meters in width of continuous mineralization, but in a stockwork of silver, lead, zinc style mineralization, classic Keno style, but much wider zones.
So what I've been recommending to companies is to think about the future of the silver price. A lot of companies, they have a hard time doing that. But what I would recommend is that you think in terms of silver prices going a lot higher. Mm-hmm. So if you get to $100 silver, every 1 million ounces of production is worth $500 million. So what I would recommend is you recognize how rare silver mines are.
Yeah.
And you wait for the phone to ring. And when the phone rings, Hecla calls you, say, yeah, we're looking for a 50% free carry. If you want to do a 50% free carry, it's yours. And if you do that, you get $250 million per 1 million ounces of production, your valuation of your company. If they double the resource to 36 million ounces, the value goes to 500 million. If they quadruple it, the value of your company goes to 1 billion. So you have a 1 billion valuation, you do nothing. It's free carry. You have to come up with a loan for the CapEx, but it's probably going to be a 2-year payback. So it's a nothing burger. You loan the money, you pay it back. You can pay it back through the free cash flow that you're going to get. So the bank is kind of guaranteed getting paid back, if you will. And so, like I said, you just wait for the phone to ring and do the 50% free carry. It's a really smart strategy, and your shareholders are going to benefit immensely because, like I said, if they can, I think it's going to be Hecla is the one, right? So if Hecla calls you, say, yeah, 50% free carry, that's what we want. And if they say, no, that's too bad, well, call me back again, right? You wait.
Right.
No, they're not going to do it. They're not going to do it today. They're not going to do it $60 silver. But guess what? They are going to do it at 70 or 80. Yeah. 70 or 80, they're going to be calling you and, hey, we still got that 50% free carry if you want it. Okay, but hang it up, right? And then after a while, and then the board goes, hey, it's a 50% free carry. If you guys want to do it, we can do it, right? That's the approach I would do if I was you. And like I said, you're going to value your company anywhere from, you're already at 250 million if you do a 50% free carry, and it just goes higher from there. So your market cap today is 45 million. So if you use that strategy and you think in terms of higher silver prices and you think in terms of the future, that's the best way to go. So you talk to your board about it. Say, Don Durrett says this is the best way to go. What do you guys think? We wait for the 50% free carry. I'll let you reply to that.
Yeah, no, hey, we're patient, and we know we can add a lot of ounces with really low cost now that we've got the deposits developed and we've got these additional high priority targets. So a modest amount of investment capital on our part can increase and bulk up those resources, demonstrate the kind of potential blue sky. I love it. I'm very bullish on silver as well. I think once we blow through the 50, I think it's got a lot higher to go before we hit the new kind of all-time high. And we're patient this way. We're well funded. We've got great backers. We've got Eric Sprott as a 10.5% holder. We've got 15% in high net worth. This handful of high net worth guys. Management's 15%. Newmont's 9.5%.
Yeah, that's what. I hate to cut you off, but that's exactly what I mean. If the only way that they get your property is a deal that you want. That's the important thing, right? So Hecla doesn't want a 50% free carry. They don't want it, right? But they don't have any choice. You have the leverage. So it's there for the taking. That's my point. But all you need is higher silver prices. And like I said, 50% free carry is the best deal you're going to get, because you get 50% of the free cash flow. It's a beautiful thing, and you're probably going to have to do very little share dilution, because again, the banks are like, well, Hecla's building it. We're going to get paid back. The free cash flow is coming. Yeah, here's your money, right? I've seen companies today that are raising money that are getting more than 10 banks because it's an easy payback. So if the banks are confident, the phone's ringing off the hook. They have like 10 different offers, and that's what's going to happen to you. The banks are like, oh, you're going to build that mine with Hecla. Oh, here, take our money. Here, take it. And I mean, that's what's going to happen when you have a 1 year payback, 1 year, 2 year payback. The banks are like, here's the money. So, and the other thing is beautiful. You don't have to do one thing. They drill it, they develop it, they build it. You do zero, and you get all that value. So again,
and the beauty is that when you're looking at open pit as opposed to underground, you don't have all that development. You can get started right away into ore. The overall costs are way lower. So those paybacks could be, especially at higher metal prices, those paybacks could be dramatically, even less than a couple of years, right? And it's a game changer. When you've got a high grade, high cost underground mine, and you can start to have scalable open pit, and you can blend and optimize, it's a game changer.
Okay, let's start. Sorry to cut you off again. I'm bad at this.
No way. Go ahead.
No company has done this yet. You could be the first one. So I've been telling companies to do this 50% free carry thing. There's no reason why you can't put on your company presentation that the plan is to do a 50% free carry. You can flat out do it. There's nothing illegal about it. The regulators don't care. You can put on there, we're drilling, we're adding ounces, we're waiting for a 50% free carry offer. You can say it publicly.
It's a business objective. There's nothing wrong with putting it.
There's nothing wrong with doing it. Here's the game changer. Not a single company has done that. Not one. I analyze them all. Not one has done it. I keep telling them this is the best way to generate shareholder value, bar none, for a company that's an exploration company. 50% free carry. I'm waiting for somebody to basically say it publicly. This is our strategy. This is our strategy. We're doing 50% free carries. We did the discovery. We found it. We're keeping 50.
Yeah.
Do it.
I love it. That's great.
Yeah, I think this segment of the interview is going to become a TikTok or something. This is good.
The thing is, we're just coming out of this
I only have
bear market, right?
Yeah, I only have one other question. What is the size of La Plata in hectares?
In hectares.
Or acres, either one.
Yeah, I think we're about 35 square miles, which it's Keno is 171 square kilometers. So
not Keno, just La Plata.
Yeah, La Plata is 35 square miles. So what is that in hectares?
Well, that's pretty big.
It's a big land package. So the key thing there is that because it's a historic high grade silver gold vein district,
Right.
It was the whole district was staked up until relatively recently. And so when Rio Tinto came into the district in the 50s, they could only pick up the central porphyry part of the project. And we've now consolidated the whole district for the
Is
first time.
is the infrastructure good? Do you have any? Is there any communities nearby? Is there any red flags or anything for that La Plata property?
We sit halfway between Cortez, Colorado, and Durango, Colorado, just north of Highway 160. There's no towns on the site. You can see the kind of terrain we're in. It's mountainous, high desert terrain. So really excellent spot in terms of location, logistics. We're at the exploration stage still, right? Figuring out how big this thing's going to get.
Is there any is there any houses? Anybody live on the property?
No, not at all. Yeah, no,
Nice.
it's really ideal.
Wow, that sounds fantastic.
Yeah, in Colorado, real estate is going through the roof.
Yeah.
So I'm sure there's a lot of people who want to live there. But okay, that's great. Well, Greg, I think we should leave it there so Don and I can summarize. Yeah, this is great. Really, really good job today. I think the stock is very undervalued versus peers. And we encourage people to go to Metallic Minerals website to take a closer look. Thanks, Greg.
Appreciate the time. Thanks, guys.
Thank you, Greg. Good story.
Take care.
You too.
Companies. I mean, all of these stories have been very exciting. Yeah, I think that the Keno Hill property could easily, triple in size. He's got 40 targets. He hasn't drilled very much. He's only drilled 18,000 meters, which is really not very much. So, the thing is, that's why I say do the free carry, let them drill it. And so, yeah, I think it's very high grade. It's going to be a mine. There's no doubt. And it makes perfect sense for Hecla to acquire it. I've never bought it because the issue is, how big is it going to get? It's a lot of unknowns there. Is it going to get to 50 million ounces? I think it is. I think it's going to get to north of 50. Pretty confident it will, but I don't know if it'll get to 100. Probably won't get to 100, but somewhere, north of 50. Which is a very valuable silver mine. I mean, the market cap is 45 million. So you're getting that massive copper project for free. And that copper project, I mean, it's 1.3 billion pounds of copper. I mean, it's a big one. And he's talking about all these targets. It's going to get even bigger. Could be one of the biggest copper projects in the US, and Arizona has some really big ones. So yeah, if you like copper, it's pretty exciting.
Yeah, I agree. It's interesting. Greg mentioned they just raised $8 million. I know for a lot of juniors, if we were to record this even a year and a half ago, was like raising 1 to 2 was sort of as hard as to raise 5 to 8 now. I mean, it's really an environment coming off of Beaver Creek that I don't think the average investor understands how difficult it is to raise capital in this sector. It is brutal for some juniors, even when they have great projects like this. And now I'm seeing something, I don't know if you picked up on it, Don, with your meetings, because you and I met with, I think all of our meetings were different except for Lahontan Gold and Aftermath Silver. But, the vibe I was getting at happy hour from hedge funds, private equity, like a lot of these guys are willing to come in now, 100 grand lead order, 500 grand lead order. They weren't doing this kind of stuff even a year ago. I mean, they were just sitting back and waiting and seeing how things developed. And now they're taking action, which is really, really positive. So it's good to see companies like Metallic that have already gone through this process in the summer, done a little bit heavier lifting, right? But now they're cashed up and they're ready to go.
Right. Absolutely. Everything. The tone changed in August. It really did. It was a massive tone change. You could just feel it. It's been dead for 10 years and now the market's come alive. So prior to August, it was just a rebound, if you will. I mean, Newmont was up 100%, but it was, it hadn't had a new high, if you will, a new cycle high. So these companies were all just rebounding off a deep correction. And so, but then in August, it was like, not only have we rebounded, but now we're going higher. So it was a big tone change, and I don't I said this earlier. We opened. I say I think you ride the bus now. Ride the
Yep.
train.
Yep. Well, Don, thank you for the comments as always and the great questions. We'll leave it there. If you guys would be kind enough to check out our websites, Don and I would really appreciate it. We try to advocate for clients in everything that we do. We're really working a lot of extra hours these days to try to bring you a lot of interviews like this, but also Don through his. I wanted to throw out a prop for you, Don, on Seeking Alpha. You know, I didn't mention this at the front end, but you were just named Seeking Alpha's best analyst of all analysts as of August 31st. That's not just mining; that's all sectors, which is pretty incredible. So, congratulations.
Yeah, I didn't expect that. I was kind of shocked. I was at the top of the list. They actually contacted me. I'm doing a webinar with them, which is really,
Oh,
really nice of them too. I've done a couple audio ones for Seeking Alpha, but they're going to do a 1 hour webinar with me. So just me. That was pretty cool. So you get to the top of the list, you get a webinar. Um,
that's
uh,
great.
and
Congrats.
yeah, the reason why is because I only pick quality names with really good upside. A lot of these names have really done well. So it's a timing thing in many respects. You know, the market's ripping right now, and I do gold. I do gold miners, so I got a bit of an edge on the other guys.
That's true. I mean, timing does matter, but technology is also having a pretty darn good year, and there's a lot of sectors that are thriving. So, congrats on that. But yeah, check out FenneckConsulting.com. I'm going to have my 10-year history as a portfolio manager in December of this year. I'm very excited about it. We're going to post our September 30th numbers in probably mid-October. I hope to be, at least around where GDX is. It's been tough to keep up with these ETFs this year because we buy a lot of things like metallic that are value stocks, right? And they have to move up for us to compete with something like GDX, which is full of producers that are kicking butt right now. We firmly believe a lot of these juniors are going to catch up, and so we'll leave it there. Guys, thanks a lot for joining, and please reach out to Don through his website or mine, FenneckConsulting.com, and we'll see you next time.